Ryan with Sacramento Appraisal Blog, and today I wanted to go over the latest trends in Sacramento real estate. If you can give me just a few minutes, I will make this worth your time, and I hope it's informative. Let me know if you have any questions. Okay, median price level in Sacramento County saw a dramatic increase through 2005, and we all know the story. The real estate bubble burst, values declined, and really they hit the bottom in first quarter of 2012, and since then we've seen exponential appreciation, really appreciation that reminded us of the appreciation during the previous real estate boom, or we should call it a bubble, really. But at the same time, let's look at some basic economics. Okay, typically when values increase, inventory is decreasing. Okay, when values are decreasing, inventory is increasing. Okay, we see the same thing when values began to increase during this latest boom. Well, inventory was really low, and values have begun to cool off. Well, inventory is going up. Let's look at this a little closer. Right now, the median price in Sacramento County is about 245,000. During the summer, it was about 253,000. And part of this cooling off is certainly about fall and colder months. There's just less people looking for homes, but really part of it too is just basic economics. You can't have inventory increase by 2.5 times and have that not affect property values. Inventory was hovering for about 1 year at 1 month of housing supply. It's currently at 2.5 months after just about 5 or 6 months. Okay, so there's been a very quick uptick in inventory. Foreclosures used to dominate the market, coming in at over 70% of all sales. Now they're only 5%. Short sales have also really declined from their peak, around 35% or so, to really about 10% over the last couple months. Cash sales in Sacramento County, represented by all sales, this yellow line, you can see when the market hit bottom here in early 2012, cash investors came in the market and you saw an exponential increase in investor activity. Well, really over the last couple quarters, cash sales have gone down by 14%. All right, I'll show you a graph in a minute to show you what impact that's having on the market. You can see the same trend. The blue line represents all sales in the county under $200,000. Okay, so investors clearly are seeing a decline and really showing numbers more akin to right before the property values hit bottom or right at the bottom of the market. Okay, so that's significant to really look at and to realize. What impact is this having? Here's cash sales in all blue beginning to decline. Well, cash sales are declining. What that's doing among FHA buyers, it's giving them more opportunity. You see an uptick in FHA. You see the same thing under 200,000, cash sales decreasing, FHA sales increasing. All right, so there, a lot more buyers can actually get into contract. They can be a little more picky. Sellers are beginning to offer concessions again because sellers have a little bit less power right now in the market. The absorption rate in Sacramento County is at 40%. What does this mean? This basically means that 40% of all listings are either going into contract as pending sales or they're closing escrow in any given month. Okay? As inventory increases, the absorption rate decreases. All right, there's always a lot going on in the market. Let me quickly touch on this. Here's property values in blue, and you can see an exponential increase. But at the same time of this increase, you see the job market beginning to improve, unemployment rate going down. You see interest rates seeing a pretty dramatic decrease, a little bit of an uptick lately, and you also see inventory seeing a dramatic decline. Okay, and so this just underscores how important it is to realize that a market is not just about supply and demand. There are a lot of layers that impact or create value in a real estate market. Okay, a couple more things on unemployment. You can see unemployment in Sacramento County hit the peak at 13% in July 2010, and then right now it's about 8.4 or 8.7% depending on how you look at the numbers. Okay, so the job market is definitely important. The economy will become even more important, I think, this year. If we do end up having less investors and interest rates go up a little bit more, they probably bottomed out this year. And inventory increases, we're going to need to see our local economy improve, and what the economy does will impact the real estate market. The last graph, let's look at Sacramento County, California, and the United States in terms of unemployment. You can see Sacramento in yellow. You can see California in red. Sacramento and California sort of go hand in hand most of the time for unemployment. This is unemployment since 1990. all right, and you can see the United States in blue. And you can really see really when the economy it really turned sour, the bubble burst in real estate, people lost their jobs. California and Sacramento really took off far from the level of the United States, and really have really been since attempting to return to um, to where the U.S. is, just above 7% unemployment. So anyway, I hope this was helpful. Let me know if you have any questions. Thanks so much.